But we have again now once, twice, and 3 times resistance. And my opinion is that the next outcome leg is this. And the interesting part about when we showed up with you before is that we gave you a continuation pattern that had a $2,905 target in there. So that actually takes you to the doorstep of the 3K mark, which the 1927 very much did for the 2K mark. So there's actually quite a decent uniformity and continual adherence to the very seminal key levels of significance for precious metals, which are the $1,000 marks.
Francis Hunt is the founder of the market sniper and originator of the Hunt Volatility Funnel, HVF method, a trading methodology that focuses on identifying key breakout trading opportunities and key trading levels for various assets, including precious metals. The renowned technical analyst recently joined the Wall Street Silver YouTube channel for an interview during which he shares an in-depth technical analysis of the precious metals market. During the fascinating discussion, Hunt shares his outlook on the price trajectory of gold and silver in 2023 and subsequent years. He begins by examining gold's initial breakout at the $1,000 mark and how similar it is to what's happening currently. According to Hunt, the breakout above the $1,000 mark did not happen overnight. In fact, it took no less than 3 major attempts. Then an impressive breakout that took the precious metals price right on the edge of the $2,000 mark. Hunt believes we have now had 3 major attempts to break out of the $2,000 level and head right for the $3,000 mark. As it happened with the $1,000 mark breakout, Hunt believes the next major move will push gold prices very close to the $3,000 mark. However, the technical analyst cautions that these moves will not happen overnight. Hunt warns that we could get some more dull periods in the short term when nothing really happens before we begin to see impressive and significant changes in the gold price chart. According to Hunt, who shares every detail down to his expected timeline for each major move for gold and silver, September is the month to look forward to for both precious metals. During the September to November window, Hunt says money managers make a lot of small portfolio changes that could see them dumping their equities to allocate more to precious metals. This is coupled with other changes that would be motivated by changing economic conditions later this year. This is when Hunt believes the next strong gold bull run will begin, a move which the technical analyst believes will take the leading precious metal to the $3,000 level. During his interview, Hunt also does an in-depth analysis of the gold-silver ratio and how it is indicating several major breakout moves for silver in the coming months and years. If deep dive technical analysis, charts, breakout levels, and timeframes sound interesting to you, then ensure you watch, share, and like this video. You can also subscribe to the channel, turn on post notifications, and drop your comments and observations in the comments section below. It helps with the YouTube algorithm and contributes to the channel's growth. Thanks for the support and enjoy the video.
It's not over the night good news. In essence, we're having, so people need to understand the multitudes of timeframes, but the macro time frame is that at some point when we have the disorderly descent into the new system, it's likely to get very disorderly to the positive side for precious metals. There is technical setups that are behind that, such as a gold-silver ratio, the macro head and shoulders, that will see a run through the 32s as a gold-silver ratio. But first, we've still got to come back down all the way to the 65. So there's a number of layers in this. So I don't want people to run out, he's immediately bullish. I think we're going to be a bit dull short-term until around about the September market. We broke out, a couple of key levels were taken, but we've also only hit the 2,000 mark for the 3rd time, and we're pulling back. So there's some winding up, some pause, some gestation. I don't think we dipped very far compared to the previous 2 events at the 2,000 level. And in fact, maybe it's best if I just bring the charts in. In fact, I'm going to shoot out to the monthly to start, and I'm going to just throw down some key levels here. When we overcame, we were actually involved in the bull calls of the 1,000 run. You'd only once had a small poke above the 1,000 mark. This was the 1,000, and again, you had a very similar type structure. You had a poke above the 1,000 and a hard hit down. That coincided with 0708. Then you came very close to the 1,000, you got another pushback, and you came close again, you got another pushback. You got a very ascending structure. So you failed 3 times to win the 4th. And I'm just going to reiterate that. So it's tested 3 times, once, twice, 3 times, and then you smashed it, and you literally almost went to the next millennial level of significance, literally, because 2000 was not far away. You traded 1927 over here, and we find ourselves at the 2000 level over there. And in essence, we are having the same again. We're getting the test. Note this is monthly. So whilst we did trade higher than 2000, we couldn't hold it on a monthly close at any point. So this is very typical of price behavior. It plays footsie with a line for a long time before it eventually does the necessary. But note, once you've got properly above something, it then serves as very fundamental support. So there's your first test. That was the 21 bull run. There's your second, and there's your third. And note also, you didn't come back down and visit that. That supports what, even though you had quite a strong bear market after the 1927 run there, you've now established yourself above the 1,000 mark. And in the same way, we are going through a similar process for establishing ourselves above the 2,000 mark. So you can see there's a sell-off there. This was actually a worse sell-off. This was the tightening of gold interest rates perspective. Initially, the Fed only did 0.25. We were wrong here. We called for a down move here, and they only did a 0.25 run, and in fact, gold ran up. But then they continued to do 0.75 4 times in a row, and this is the whole interest rates bad for gold. Well, actually, when you're creating that much money, you eventually came back up fairly strongly there. But we have again now once, twice, and 3 times resistance. And my opinion is that the next outcome leg is this. And the interesting part about when we showed up with you before is that we gave you a continuation pattern that had a $2,905 target in there. So that actually takes you to the doorstep of the 3K mark, which the 1927 very much did for the 2K mark. So there's actually quite a decent uniformity and continual adherence to the very seminal key levels of significance for precious metals, which are the $1,000 marks. So this overall pattern structure, if I just remove some of my fancy drawings away and just say, you know, this broadening structure, or even better still, this flagging process that broke like that, the target that got generated up there takes you to that $2,905 level, which is gateway 3K.
During the interview with Wall Street Silver, Hunt does an excellent chart analysis and predictions for the gold-silver ratio. The gold-silver ratio is the proportional relationship between the respective spot prices of gold and silver. Simply put, the ratio identifies how many ounces of silver can be bought with 1 ounce of gold. Being the world's favorite precious metal, gold has always been more expensive than silver. But the gold-silver ratio is not fixed. It changes regularly depending on the current spot price of both metals. Often, the ratio rises during precious metals bear markets and falls during bull markets when gold generally becomes less valuable in relation to silver. Being the more volatile metal, silver prices fluctuate widely during bull markets, as in bear markets, sometimes rising by several percentage points in a day. According to Francis Hunt, the gold-silver ratio can tell us a lot about the price trajectories of both precious metals in the short and long term. Hunt believes that the ratio, which is currently above 84, will drop to 65 as gold makes its way to $3,000. From 65, Hunt believes the ratio will continue to drop lower, especially as the silver supply and demand gap continues to widen. Here's another clip from the interview.
So at some point, we expect this gold-silver ratio to come on back down like that, and then break this ascending grind line that we have here, and that will begin a fast journey of progress to 66. At that point, we think 65. We think it bounces a wee bit there at the 65, 66 range before going all the way to its target that we forecast of 32. So if you go back and think about that, if that's as part and parcel of gold reigniting and completing its target, where it will pause for a while, 2,900's zone to the 3,000 zone, then you will get to an area where, in essence, you are resting And if let's just say 3 grand for gold, I've made this case before. If you've dropped down to 65 during that period, you are talking the gold silver ratio having come back quite a lot, and you take gold and you as your calculation for silver will give you around about the $45 to $50 mark. And that's also the flag on silver's projection forward. So the gold silver ratio and relative valuation coming first step to 65 is the stage that takes gold to 29, which isn't going to be done in a day, a week, or even a month. I only expect it to recommence in September. So it's going to probably run into the period of 24 to even attain that. But during that period, you will have 75, you'll potentially have 45, my apologies, to $50. By the time we get to a 32 gold silver ratio, which is further forward in that, and let's say now you're guessing where's gold at that point, it could be at 4,000 or 5,000. If you're at $5,000 gold, and that could be 3 years later, you know, and we're having quite a strong move, bit of a pause, consolidation, then a strong move again, and you're at around a third, in other words, 33-ish gold silver ratio. You're going to be staring at the fact that if you're at 5,000 gold, you knock off 2 zeros and you times by 3, you're at about 150 gold.
Yeah, that'd be incredible.
Yeah, $150 dollars for silver. My apologies, not gold.
Yeah.
But and then the final stage that I actually assess, which was where you came in with Mr. Neumeyer's comments around how much silver he pulls out, a sub double-digit gold silver ratio would imply a 4-digit silver. So a sub so you're sitting at 33. If eventually you go 9.99 sub 10 gold silver ratio, and you're sitting with gold at 5 or 10,000 and sub 10, you're on $1,000 silver. So that's for that extremist point where you have depleted all supplies above ground. The valuation of silver has reappreciated relatively, is still being physically demanded for industrial use sufficiently, and there's enough stackers for the, call it pet rock collectors, as we're probably going to be referred to, taking up any surplus. They're actually going to have shortfalls. This is going to create a new necessity for mines. The only way I see this changing significantly is if we have, a complete planetary population decimation, and there's far less gold bugs, silver bugs, far less solar panels needed. And we can't rule that out.
Yeah,
but
of course.
if everything else stays as it is for now, and those scenarios play out, there's quite a few different time frames to that. So I tend to prefer to focus on the next significant move, and that would be the breakdown to the 65 gold silver ratio and the move to 2,900 as part and parcel of a reignition of the gold bull market, which I anticipate when the bankers are back at their desk.
Hunt says gold's next strong bull run will take it close to the $3,000 range, a 55% increase from current price levels. Such a move will of course impact silver prices, which Hunt believes will be trading anywhere between the $45 to $50 range. From its current price of $22.88, that would be a 118% increase in silver prices. The technical analyst also predicts a stronger move to $5,000 for gold and $150 for silver, possibly within the next 3 years. What are your thoughts on Hunt's analysis and price predictions for gold and silver? Please drop your comments and observations in the comments section below. Also, ensure you subscribe to the channel and turn on post notifications for more videos like this. Thanks for watching.